The recent banking crisis is hanging over the economy, and it's bringing fears that another recession may be on the horizon. Brent Wilsey of Wilsey Asset Management joins us now to discuss this topic. Brent, good morning.
Good morning.
If a month ago I'd have told you that Silicon Valley Bank was going to implode, would you have been surprised?
No, because it was kind of hidden. And now that's come out, it is no surprise this happened. Because you look, and again, in their balance sheet, what they were doing. And I've said this is run like a hedge fund. They were doing parties. They were giving personal loans. They were funding wine for some of their clients. And they really forced their clients to say, hey, we'll give you this loan that nobody else does. Because a normal bank, they're going to loan on the income, the strength of the assets. Silicon Bank was saying, no, don't worry about that. Those old guys think that way. We don't care if you have income now or good assets. We'll loan based on what we think the future can be. So that is just crazy to do that, and that's why they're in the situation they are. They also did some strange things too as far as where they put the money. And there's some accounting rules that have to change. And one thing I want to point out too is that people's money is going to be safe. The government's going to back it up no matter what the deposit is. This will be the last time. The government has to stop doing this, but they will do it this time. But I want to tell people it's not as bad as we think we are. Oh, it's the third largest bank default in the country. Well, the last one was in 2008. In comparison purposes, back in 2008, the median price of a home was $180,000.
Okay.
It's now about $350,000. So that has increased. So when you say it's the third largest, if you put inflation into that, it's really not that big compared to back then. Okay, so I want people to realize this is not as bad as it sounds. And they are unique in the way that they did things. So it's not going to happen again. There's not going to be another bank failure. Important thing, we've got to wait for what's going to happen going forward.
Yeah, and that was my next question, because people are watching right now going, okay, is this the first domino to fall? Am I, they want to know that their money's okay. Right. Obviously, insured up to $250,000 by the government.
$250,000, and that's now gone. It was kind of some debate back and forth between Treasury Secretary Yellen and the President and the FDIC. I mean, everybody, but that's going to happen. They're going to cover that. And not because of Silicon Valley Bank. They want people to know that, hey, no matter where your money is, it's safe. The problem we have now, Jason, is that it is so easy to move your money. Also, too, with social media, it's so easy to start these things going on. And we're in a different society now to where you don't go into the bank any longer and talk to people. Everything's done on your phone.
Yeah.
So that's why so many billions of dollars are moving, because it's so easy to do now, which is causing problems where banks are losing deposits very quickly. I think it was last weekend, B of A picked up $15 billion in deposits in one weekend.
Wow.
A weekend, not a weekday, but a weekend.
Right.
So these are things that are going on that are causing problems with banks, but they will be safe, and the system will work through this eventually.
All right, Federal Reserve meets on Wednesday. What are you expecting as far as interest rate changes?
That's a big problem, because that's what caused this whole situation. Is we had too much money in the system, we had inflation, then we had to have rising rates to cool inflation. Well, now that's hurt the banks, because I kind of talked about, let me explain how this works, because you'll hear things like duration. People have no idea what duration is. It's how long a bond lasts. What Silicon Bank also did was they took long bonds going out 10, 20 years, and they collected the interest, which gave them income, which gave them bonuses because they collected the income. But in the meantime, and we weren't buying bonds. I kept telling people for the past 2 years, 3 years, do not buy bonds. Rates are going up. Rates go up, bonds go down. Well, the bank didn't have to account to those rules. That's one rule the government has to change, is that they got what's called mark-to-market when you buy a long-term bond, because that's another thing causes a problem. So this is why Wednesday is such an important time, what Powell does, because I think he's going to raise rates maybe 1/4 point, and then he should be done. Don't think about talking about declining rates going forward. Say this is it. We're going to be data dependent, very important, because the consumer price index and the producer price index came out last week. They're not bad. Things are looking better. Inflation is declining. One thing in there is shelter costs. Shelter costs are 12 months behind. We see rents declining now, but the inflation index still shows that they're higher from 12 months ago. So there are things that are changing. We will get through this, but there's so many details. I mean, I could probably spend a half hour explaining the whole situation.
Right.
But I do want to tell people, you're going to be safe, but things are going to be changing.
So that's a takeaway here. You want to make sure people know that you're okay.
You're okay.
Don't panic, but
Yeah.
changes are coming.
Changes are coming, and you don't need to change banks. I don't care if you're at Torrey Pines Bank or if you're at Wells Fargo. It's going to be the same. Your money is safe. But the changes that are coming that you mentioned is that there's 4,700 banks in the U.S. right now. In Europe, there's 5 big banks. That's the direction that we're going. Why is that? Because when we were younger, and I asked you before going on air, do you know who was in your bank? No. Most people do not. I do try to go to the bank once a month, say, hi, Tiffany, how you doing? At JP Morgan Chase. I mean, but now that's the old school.
Yeah.
Everybody's doing it on their phone and their computers and their laptops and their iPads. They don't go to the bank any longer. So why do you need a small community bank? You don't. That was the advantage they had before. You knew them.
Yeah.
So down the road, I think we'll be like Europe, to where we're going to have just maybe 10 big banks, and these small little banks will go because they'll be bought and eaten up by the big banks, because right now they're on sale. I mean, First Republic down from 220 to 20. One that I like is Key Corp down 50%, a very strong regional bank, but they're on sale. Great time for investors to buy them, the right ones. But also 2 big banks are thinking the same thing. But I think they're going to wait till after Wednesday. What is the Fed going to do? Very important day on Wednesday, what he does with the rates.
All right,
and
we'll
what
be
he
watching.
says, too.
Yeah. Brent Wilsey, Wilsey Asset Management. Thanks, Brent.
You're welcome.
Appreciate you breaking it down for us.
You're welcome.